AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We are doing it live and doing more at 4 weekday afternoons. Mottek On Money, live on the air on 790 KBC, streaming live online worldwide at KBC.com, and the on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Quite a day today. Stocks finishing mostly lower as investors took in another disappointing reading on consumer confidence and President Trump's announcement that 25% tariffs against Canada and Mexico still will be implemented next month. Bitcoin and other cryptos took a big tumble today. Gold also taking a hit, pulling back some more from record highs. Oil pulling back below $70 a barrel, and benchmark government treasury note yields pulled back. The S&P 500 coming in for a closing loss of 28 points, settling at 5,955. That's the index that hit a record high last week. The Nasdaq tumbled 260 points, closing out at 19,026. The S&P 500 and Nasdaq down for the fourth trading day in a row, but the Dow managed a closing gain today of 160 points, settling at 43,621. That was the best day for the Dow since February 13th. Consumer confidence hitting an 8-month low in the month of February on concerns about the outlook for the broader economy, according to the survey released today by the Conference Board. It was a risk-off kind of day today, with investors turning to U.S. government debt market for safety. The yield in the 10-year note ended at 4.297%. That's the lowest seen since mid-December. It was not a magnificent day for the magnificent tech stocks. The Roundhill Magnificent 7 ETF, which tracks those names, closing in correction territory today after tumbling more than 11% from its record high close set on December 17th. With the stock market sell-off extending into its fourth day, investors fleeing to the safety in the wake of another disappointing reading on consumer confidence, among other things. Post-election high in consumer confidence after President Trump's victory has apparently petered out as the public digests major upheavals in economic policies such as trade and tariffs, according to analysts talking to the Conference Board. Tesla taking a hit today, dipping to its lowest since last November on the heels of lower sales in Europe, pushing the EV maker's valuation below $1 trillion for the first time in 3 months. NVIDIA closing down nearly 4 today to 126 and change ahead of its big earnings news tomorrow. That's going to be one of the major events of the week. After gold hit all-time highs recently, looks like we saw some money coming off the table there today. Gold dropping $54 to $2,909.20 an ounce after settling at a record high of $2,963.20 on Monday. Coming up, I'll talk more about gold and what's happening with the economy as well as tariffs. I'll be speaking to AXEL MERK, the president and chief investment officer, portfolio manager at MERK Investments, which includes OUNZ, the VanEck MERK Gold ETF. Also later this hour, I'll be speaking live with Mark Wilbur, founding member and former chairman of the Los Angeles Business Federation, LA BizFed, chairman of Employers Group, and former associate dean of the USC Marshall School of Business, on the epic recovery effort happening following the firestorms here in Southern California, as well as what's happening with the Main Street economy. But first, on your money, the markets, the economy, and the whole works now. Joining us live, Gabriel Wisdom, Managing Director of American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call here this afternoon.
Well, thank you, Frank. It was a day where we accentuated the negatives, and there was plenty to worry about. We had Walmart's earnings, and they were super, but the stock sold off. You've got negative sentiment. You have consumer sentiment declining, as you mentioned. The PMI, the Purchasing Managers Index, is down. That tells us that companies are reducing spending, and we see rising credit card delinquencies. Plus the jobless claims coming from the DOGE efforts. There's a lot to worry about, and that's what happened today. But interestingly, this is all part of the austerity cycle that we're in. We can reduce the debt by taxing or reducing spending. Those are the two options historically, and the deal maker in chief is hell bent on tariffs. Some economists think tariffs actually will not matter, and the Fed has been pausing the interest rate cuts because of a slowing economy. But in effect, the slowing economy has brought down long-term rates. As you mentioned, the 10-year Treasury is lower, so rates are coming down all by themselves.
That's very interesting, and that's the one that impacts the fixed-rate mortgage rates, those longer-term Treasury note yields that we cite here on this program. And that's very interesting, and that's something that President Trump has targeted, the longer-term rates. He wants to see them come down, while the Fed, meanwhile, seems to be holding steady on its short-term rates right where they are here at the moment. Another way it's been described, I've heard, is the reprivatization of the economy with all these government cuts, the Doge-led cuts there in federal government. What about all of that, and what are your thoughts? You're also an economist. Your thoughts on how this is going to impact the nation's unemployment rate, and if that goes up, will the Fed then be put into a corner and have to lower short-term rates as well?
Well, Frank, we had a bit of a bubble. The honeymoon lasted just far too long because of cheap money and additional capital spending. The government was pumping up the economy. Now, this happens a lot in year 4 of a 4-year presidential election cycle, where the incumbent spends and stimulates in order to create a happy days are here again scenario and get the incumbent party reelected. It didn't happen this time because of inflation. Now, generally, in the first year of a 4-year presidential cycle, you get austerity, you get reductions. The president can afford to do what needs to be done in order to get back to some sense of equilibrium. Spending and debt must match each other, and I think that's the sort of thing we're seeing. We're in that first of 4-year presidential cycle situation, and the new party is doing the right thing, in my view.
All right. What about oil suddenly below $70 a barrel all of a sudden, despite the upheaval in the Middle East and all the nervousness there and the belligerent comments coming out from Iran against Israel again recently? Oil right now just above $69 a barrel. That's good news for those of us at the gas pump here now.
It's very good news. And what's interesting is one of the barometers for the oil industry, Occidental Petroleum, is down about 25% from its highs over the past year. Now I think we know why Warren Buffett's Berkshire Hathaway has almost 30% of the Occidental Petroleum stake in the Berkshire Hathaway portfolio. And it's because the company increased its dividend, it's increased production, it's paying down debt, and despite the oil price weakness, Occidental reported higher fourth quarter earnings, much higher than a year ago. One major Oxy project involves carbon dioxide removal from the air. The other oil producers are doing this. They're taking advantage of lower oil prices to make acquisitions as well. I wouldn't give up on oil and gas. It's here to stay, at least for the next 10 plus years.
All right, it's been a bit since we've chatted behind live microphones, since Warren Buffett came out with his letter to shareholders. Berkshire Hathaway, his investment firm, I see Berkshire Hathaway Class A stock, which is the most expensive on the New York Stock Exchange. It did close higher today by about $2,500 to $750,040 and change per share. Any big takeaways that you got out of Warren Buffett's letter to shareholders recently?
Well, he's increased his cash holdings. He's been paring down some of the positions that have done very, very well for him and for Berkshire Hathaway shareholders. But at the same time, his letter made it clear that he's committed to owning equities, to owning stocks, not cash, because over time, the purchasing power of cash in any economy, it diminishes. That's just how our system is set up. And interestingly, Berkshire Hathaway is not a high-tech portfolio. I thought it was interesting that the Dow Jones averages, those 30 old industrial kinds of companies, and the older tech companies that make up the Dow 30 was up today when the broad market pretty much sold off. There's an exchange-traded fund, Frank, that owns the S&P 500 minus the Magnificent Seven. So it owns 493 of the other stocks, not Apple, not Microsoft, Alphabet, Amazon, NVIDIA, what else? Meta and Tesla. The symbol's XMAG, and it's up about 3 times better than the S&P 500. So that's where we're at, and I think Mr. Buffett recognizes it.
That's very interesting. Looks like the Mag 7, as I mentioned, now in correction territory based on another ETF that I mentioned earlier. And tomorrow we'll be getting NVIDIA earnings, part of the Mag 7 as well. And also, by the way, part of the Dow Jones Industrial Average now. What do you think is going to happen tomorrow?
I think NVIDIA is going to be very, very strong. The demand for Spectrum and Ethernet and some of the networking add-ons that NVIDIA produces for the AI server machinery are doing especially well. And then we got news this week, Frank, that NVIDIA, which is clearly the leader, has joined forces with Cisco Systems, the old, tech boom.
Tech bellwether.
Stock of,
yeah,
bellwether. Cisco, and so Cisco is involved to make it easier for corporations to deploy AI systems with NVIDIA. I thought that was a very interesting development.
Very interesting. Of course, we'll have coverage tomorrow of NVIDIA's earnings news, and NVIDIA did pull back today ahead of that announcement. Tesla taking another hit today, down nearly $30 at 302 and change. I just pulled up the Forbes billionaires list. Looks like Elon Musk has lightened his wallet today by nearly $16 billion. Given today's move in Tesla stock, he's now at $364.3 billion net worth. As you may recall, it wasn't too long ago that he was above $400 billion. So he's been sliding this year. What do you think of Tesla and what's going on there?
Well, it's a great company, no question about it. But orders for new Teslas have fallen dramatically in the European community. They're down better than 40% year over year. That's dramatic. Now, Elon Musk, his net worth has been all over the place, mostly up. But remember, he holds the Guinness Book World Record for the largest net worth loss in history, which occurred in 2022, not long ago. I don't think we'll see that again. I mean, he still had a net worth of something close to $100 billion, so not too bad.
Right, looks like $50 billion right out of his pocket this year. He went above $400 billion. Now he's at $364.3 billion, according to the Forbes magazine billionaires list. Jeff Bezos, by the way, well behind Elon Musk at number 2 at $227.5 billion. He was up $82 million today. What about the cryptos? I know as you know, we talked to the biggest fans here as well as the harshest critics. Today was a very rough day for Bitcoin. Got into the low 80s. Right now, I'm looking here. It's at around 88,600 or so. What are your thoughts about what's happened there?
Well, so there's some questions that I think are swirling about as to whether the Trump administration is going to deliver on this national digit asset stockpile, which the AI and cryptos are. Mr. David Sachs is directing. But even though Bitcoin is down 8 or 9% over the past 24 hours, is it more than 6% since the beginning of January? By the way, it's still up 26% since the Trump election victory. Not too bad, but the crypto rally is getting exhausted. There's no question about it. Nothing goes up forever. Now, one analyst said we could see $70,000 per Bitcoin. It does cost about $46,000 just to mine one Bitcoin. To me, that is the floor. And then the same analyst from Bernstein is now predicting that we will see 200 per Bitcoin over the next 12 to 24 months.
Very interesting. We're on the air live with Gabriel Wisdom with American Money Management. I was with a wonderful group today in Palos Verdes Estates, and people were very interested in AI and crypto and also energy demand for all of this. And what about nuclear and the utilities, which seem to be in rally mode now?
Nuclear is it's happening. All the big tech names, Amazon, Microsoft, all of them are buying into nuclear. It's a very clean and efficient means of generating the power that they need for the data centers. Data centers require cooling systems to help the servers run more efficiently and power that infrastructure. That's transformers and generators and transmission lines and so forth. Nuclear is having another day in the sun. Also, AI, by the way, I should mention, needs more humans. The latest analysis I'm seeing is that, contrary to any fear about artificial intelligence eliminating jobs, this big AI rollout now needs more and more technicians and engineers to watch over AI, to manage it, basically. So we're seeing a hybrid workforce emerging, AI and human beings.
Very interesting. And the other big story today, there's a possibility that the president of Ukraine might be visiting the White House by the end of the week. On the report that Ukraine and the U.S. have reached an agreement on a framework for a broad economic deal that would include access to Ukraine's rare earth minerals, according to senior Ukrainian officials talking to the Associated Press. Those familiar with the matter spoke on condition of remaining anonymous. One of them said Ukraine hopes that signing the deal will ensure the continued flow of U.S. military support that Ukraine urgently needs in its ongoing war with Russia. What's your reaction to this, and what about the rare earth minerals?
These are very important, Frank, but this is a complex deal. And, rare earth minerals, they're not so rare, but they're very, very necessary, like lithium and titanium. These are the elements that are critical for EV batteries, nuclear power as well, lasers, even light bulbs. Half of the reserves in the Ukraine were annexed by Russian forces. So it remains to be seen how our deal maker in chief is going to negotiate this one. But I was very happy to hear the news. 50% of Ukrainian proceeds from future monetization of mineral resources there in the Ukraine are going to be ideally going to come back to the United States, pay the U.S. back for all the financial support.
Interesting. Of course, Ukraine used to be known as the breadbasket of the Soviet Union. Up until recently, I didn't realize they had rare earth minerals there. So that's something new. Had you heard about that before?
No, I hadn't. I knew that Russia had an interest in the oil and gas reserves in the Ukraine. And also the population. Russia's population has been declining steadily over the past 20 years. So adding Ukraine would increase the population, the workforce, and make it a bigger country, clearly. But I know that a good number of these resources and rare earth minerals are still in the ground in the Ukraine.
Very interesting. At this point, let me ask you the big question here. Any specific places where you are putting money now and or taking it off the table?
Well, you're going to like this one, Frank. I started looking at platinum, since you mentioned it, and palladium. Now, both of these are down on concerns that electric vehicles are going to destroy demand, and they're way down. Now, palladium is used in gas-powered vehicles. Platinum is the primary metal in catalytic converters for hybrid vehicles because platinum is more efficient and it runs at lower temperatures in cooler engines. So I'm looking at, haven't picked anything up yet, in the Granite Shares Platinum Exchange Traded Fund, symbol PLTM. At this point, I'm looking. And then I like the idea that Intel is potentially going to be acquired by either Broadcom, Qualcomm, Taiwan Semiconductor. Somebody wants Intel, INTC, and I've taken an interest there.
Gabriel Wisdom, Managing Director of American Money Management, based right here in Southern California, also author of Wisdom on Value Investing. Gabriel, always great to have you with us. Thank you very much for joining us live here this afternoon.
My pleasure, Frank. Thanks.
Thank you very much. Out to the freeways now. Gorgeous afternoon here, 790 KABC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, the possible recession on the horizon, and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets, like your cash savings and retirement accounts, with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement and the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now, 1-800-753-8534, or visit UnitedGoldGroup.com. 790 KBC welcomes Pink Martini coming to the Greek Theater August 23rd. Tickets on sale this Friday at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you are caller number 9. Call right now, 1-888-790-5222. Tickets furnished by Live Nation. Roller coaster ride on Wall Street today with the Dow finishing higher by 160 points, 43,621. The S&P 500 slipping 28 at 5,955. That's the one that hit a record high last week. The Nasdaq taking a tumble today, down 261 points at 19,026. The yield on the 10-year note has slipped to 4.29%. Lucid shares down 17 cents at 261. Looks like Lucid has announced it's producing 3,386 vehicles in the fourth quarter, in line with what analysts were expecting. Lucid, one of the EV makers, the stock was up about 12% in after-hours trading today after the luxury EV maker narrowed its quarterly loss. Also announced a CEO change and said it aims to more than double its production this year. Tesla taking another hit, down nearly $28 at the close at $302.80. Walmart higher today by $4.02 to $97.69. Gold moving lower by more than $50. Looks like it's rebounding here now, up more than 11 at $2,930 an ounce. Crude oil futures tumbling today, right now just above $69 a barrel. And Bitcoin and other cryptos took a big hit. Bitcoin got into the low 80s today. Right now it's up about 700 at 88,690. Ethereum down 16 at 2,495. And Doge at 21 cents. And now the latest news on 790 KABC. Mottek On Money continues here on 790 KABC. Government job cuts under President Trump's Department of Government Efficiency, or DOGE as it's known, with the help of Elon Musk, creating uncertainty on the job front, tariffs and imports from Mexico and Canada. The president's proposed also fueling inflation concerns today. The stock market getting nervous, it seems. Also, Bitcoin taking a hit today, plunging to the low 80s and then rebounding. Consumer confidence dropping to an 8-month low this month, actually, on concerns about the outlook for the broader economy, according to the survey out today by the Conference Board. Meanwhile, here in Southern California, the focus is on the massive rebuilding effort underway right now following last month's horrific firestorms. Tracking all of this very, very closely, and joining us live now is Mark Wilbur, founding member and former chairman of the Los Angeles Business Federation, the LA BizFed, chairman of Employers Group, and former associate dean of the USC Marshall School of Business. Mark Wilbur, thank you very much for taking the call here this afternoon.
Great. Thanks for having me on, Frank. It's great to be back.
Wonderful to have you with us. And among the Eagles you soar with here on the business scene, what is the buzz here on the economy, and what's top of mind?
A couple of things. I think people need to kind of take a step back. There's so much noise in the media right now with DOGE and some of the inflammatory posts on X and things like that. I think people just need to take a step back. One of the things your prior speaker talked about was the trade and tariff issue and the impact that's going to have on the economy. But I'm honestly a little bit more concerned about making sure that we get those tax cuts through, because that's going to free up the investment money to create more jobs, create more opportunities, and to grow the economy further. So I'm equally concerned about tax cuts. People don't seem to be talking about that a lot. They seem to be talking about the tariffs more. Tariffs are things that it's like a gas pedal, Frank. You can turn those on and off to negotiate with countries, negotiate trade deals and things like that, whereas the tax cuts, which have a little longer-term impact on the economy, really are important to get passed. And hopefully that gets passed here shortly.
What do you think these government job cuts will do to the job numbers? Are we going to see an uptick in unemployment, and might that cause the Fed to lower rates sooner rather than later?
Well, what's interesting is, I would be more concerned if this was the job market of 2007, 2008, where we had really high unemployment in that situation. Right now, though, we actually have a pretty decent job market right now. It's not that bad. Yeah, I know there's a little uptick in the on the unemployed filings and things like that, but the truth is we actually have a pretty robust job market right now. Now, that could change. As we know, all these things, it's the economy, so, these things move. But, there's 3.2 million government employees. And I don't think there's an American tip to toe, east to west, that doesn't think it's bloated and needs some trimming and management. I mean, it's the hardest part about government is that it's a business that never shuts off, right? I mean, if you see a company out there that gets bloated or running inefficiently, competition takes care of them. Well, there is no competition for the U.S. government. It's just the government. And so they add jobs, and they add jobs. And so this is like one of the very few times that we're really trying to attack that and try and really bring some bottom line savings. And I think I have yet to talk to one person that isn't for it. Not one. The only time I see anything is when somebody shows a protest on TV. So I think the people are behind it. The people gave them a mandate with the popular vote. I mean, beyond the Electoral College. So people want this kind of change. And the truth is Barack Obama and Clinton also tried to do cuts, but they didn't have somebody in their back pocket like Elon to be able to actually get at the core attributes of these cuts. And I think that's what's really kind of striking people and kind of shocking them a little bit, if you will.
That's very interesting. And, of course, now the Los Angeles area facing unique challenges coming off this epic firestorm disaster. I see here the LAEDC will have the economic forecast event tomorrow, so we'll probably get some more insights when that economic forecast comes out as to the impact of the firestorms, which right now the last estimate I saw is absolutely astronomical. Yeah. I know at BizFed you're tracking all of that closely. Give us an update on the discussions related to the reconstruction.
We are there. There's so many moving parts to this, as you can imagine. It's not just clearing the land. It's not just those things. It's the permitting process. It's getting the approvals. It's about supplies. I mean, just even building materials. I mean, all these kinds of things have to be integrated into an overall plan. And I just think there's such a lack of confidence right now in City Hall to be able to get this done in any way, shape, or form. Right now, the City Council just got together for the first time since Mayor Bass fired Crowley, the LAFD chief. And there's so much posturing right now. So many people worried about how much blame they're going to take. And I think people just want to see action. I think people want to see us moving forward and move past the finger pointing. We got plenty of time to point fingers and find blame. The emails and the communications and when they heard this and when they didn't hear that and who was here and who wasn't here, that'll all get sorted out itself. The most important thing is to get people's lives moving forward, and we need to get these things moving quickly and stop the delays and stop the dragging the feet on these things. People want to get their lives back on track, and that is just not very visible right now.
Certainly, Rick Caruso was on this program with about the Steadfast LA initiative that he's now leading, and Steve Soboroff, I guess, is now working for free, as it turns out, after it was revealed he was going to get $500,000 for 3 months of work. As the point was made on this program this week, who thought this was going to be a 3-month job, first of all? And what about Steve Soboroff and his role in all of this?
He's an interesting individual. I didn't quite understand it myself. Clearly, the administration, the mayor's office needs help. This is not something you have a bunch of skills on the bench for, and nor does any major city have necessarily these kinds of skills sitting on the bench. You have developers like Rick Caruso. You have extraordinarily skilled people in this area all over the Southland. And so there really should be, I hope Soboroff's approach to this is to build a consortium of talent and executive leadership that can help actually get this stuff done and moving, and to really clear paths. I don't think the governor has been pretty much MIA, for a while now, and I don't see that changing. And I'm concerned about that because, there needs to be support, from end to end in the state to get this stuff done. I know there's some things moving in Sacramento. Everybody seems to be putting a bill forward on, fire preparedness, but, the truth is we need to get prepared on rebuilding. That needs to be the focus. We'll figure out the preparedness. Right now, we need to get rebuilt.
Right. You remind me of the days when we were coming off the Northridge earthquake. The last time we saw an epic disaster here of this almost of this magnitude, and Governor Wilson back in those days with the OES and all that very front line, as well as Mayor Reardon. Rest his soul, back in those days. Well, Mark, we're going to keep an open line to you and follow all this all the way through here. Mark Wilbur, founding member and former chairman of the LA BizFed, Los Angeles Business Federation, chairman of Employers Group, and former associate dean of the USC Marshall School of Business. Great to speak with you, Mark. Thanks very much for taking the call this afternoon.
Thanks for having me on, Frank.
Thanks very much. And out to the freeways now, here on 790 KABC. Mottek On Money continues here on 790 KABC. Gold hitting a record high this week of $2,963 and change, pulling back today, but rebounding here now in after-hours trading at around $2,930 an ounce. Inflation worries around the world. One of the reasons we're seeing a rise in gold prices, tariff concerns, and the list goes on. Let's bring in AXEL MERK now, the president and chief investment officer, portfolio manager at MERK Investments, which includes OUNZ, the VanEck MERK Gold Exchange Traded Fund ETF. AXEL MERK, thank you very much for taking the call. Another big week for gold, and give us your reaction to what's happening with gold this week.
Yes, good to be with you. And of course, today there was a little bit of a draft in the other direction. The gold recovered from the low of the day, but in the day that was quite volatile, some of the speculative money that might have made it into gold of late has come out, and it suffered together with much of the rest of the market. More broadly speaking, though, many of the things that had been more on the fringes, you've talked about them a long time, are making it more to the mainstream, and notably obviously the fiscal situation. People are concerned about fiscal sustainability, and that's been a key driver of the price of gold. It's been in news separately because of concerns that tariff might include tariffs on gold, not intentionally so, but simply because some tariffs might be overly broad and then temporarily might be caught, and so that's gotten some folks excited in the investment world. But one thing I like to remind people, the gold itself does not change. It's the world around it that changes.
On the air live with AXEL MERK, who is also an economist and author of the book Sustainable Wealth. And it looks like these tariff announcements and proposed tariffs fueling some inflation worries based on what we saw in the consumer confidence reading that came out today as well, which seemed to have impacted the markets, the stock market, as well as other markets here. What is your outlook on inflation given the cards on the table?
The biggest concern about inflation is that the Federal Reserve doesn't really have a strategy. They're reading the tea leaves like everybody else, and that's not very helpful. Keep in mind that we're coming from a time of high inflation, and while inflation has come down, historically, when you're coming from a time of high inflation, it's not a linear process. So we'll have some better months in the numbers, some worse numbers, and so the clarity isn't there. And then, of course, you mentioned tariffs. Right, we don't exactly have clarity on the administrative on the side of the administration of what will happen. The administration would say, well, tariffs are transient if there's such a thing because it's a one-time increase in price. And so from that point of view, of course, that's technically correct. Central banks are not very good at reacting at these sort of dynamic, let's call it that way, set of policies. And businesses, of course, they need to figure out how to run their business with all the uncertainty in terms of taxation and tariffs. Whether it's going to be inflationary at the end of the day remains to be seen. But yes, there are certainly concerns in the market. Some inflation expectations have gone higher, and that can very easily become a self-fulfilling prophecy.
Very interesting. You're also a currency expert. We have seen the euro firm against the dollar recently following the elections in Germany. What do you see happening in the currency markets?
Yes, it might be related to Germany, where there is now a conservative government coming in that will have to form a coalition with the left of center party. I do think, though, that the rally in the euro has more to do with the rally in the bonds in the U.S. The 10-year, the longer bonds in the U.S., they have been rallying because maybe of a slowing economy, because of the tariffs, or whatever the reason might have been. And so on a relative basis, the dollar has been weakening. Keep in mind, though, that the dollar had quite a long period of strength here. And so that might just be some of that. The Canadian dollar weakened today. That was after President Trump again indicated that tariffs will be imposed after all. On Germany, the election finally provides an avenue to move forward after the previous government has had quite some gridlock. The one thing that's reasonably sure in Europe is that defense spending is going to go up. And when you talk about inflation, well, at least that should be good for economic growth. Whether that's also inflationary remains to be seen.
All right, and it looks like the Mexican peso firmed against the dollar here as well at 20.47 to the dollar. What about south of the border?
Yes, you mentioned. I only mentioned the Canadian dollar because the Mexican peso kind of defied that story. The tariffs may also be imposed on Mexico again. It's my understanding there's been no conversation between Trump and the Mexican president, Sheinbaum, and so maybe the market is shrugging it off and saying there's going to be a compromise again. It really remains to be seen what will happen in practice to see whether any tariffs will be imposed and then to what extent they'll be harmful. Remember, the president wants to, quote unquote, strike a deal. And so maybe the market is just thinking that there will not be a tariff after all. And that's why the Mexican peso can do just fine in the current environment.
Axel, thank you very much for coming to the line. Very interesting day here today, and thanks for covering all the bases. Axel MERK, President and Chief Investment Officer, Portfolio Manager at MERK Investments, which includes the Van Eck MERK Gold Exchange Traded Fund. OUNZ is the ticker symbol, also economist and author of the book Sustainable Wealth. Axel MERK, thank you very much for joining us live here this afternoon.
My pleasure.
And coming up next, stay tuned for the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money on 790 KBC.
The Bigger Pockets Podcast Network is your home, get it, for real estate investing.
I am very tired of people saying that your primary residence is not an investment.
Get real talk from real estate pros about investing strategies that work.
I bought a house for $1 and it makes me $1 million.
You can become a real estate millionaire over the course of like 5 or 6 years.
No one needs a stock. No one needs cryptocurrency. They need a house.
Bigger Pockets. Follow and listen on your favorite platform.